So welcome back to the Investing Markets and Money podcast from the Armchair Trader. And today we're coming to you from the Resourcing Tomorrow conference in London. And I have here Gavin Ferrar, CEO of Central Asia Metals, to talk to us today. Welcome to the show.
Thanks very much. Good to see you.
So yes, first time you've been on the Armchair Trader podcast. So could you give us a quick overview of Central Asia Metals, the company?
Yeah, so the company was formed in the mid-2000s and listed on the London Exchange in 2010 by an IPO. And that capital that we raised then was intended to build the Kounrad project, which is a copper extraction project in Kazakhstan. We put that into production in 2012, and off the back of that then bought another mine called Sasa in North Macedonia in 2017. So we're now a two-operation business. We generate around $200 million of revenue every year, and fairly well cash flowing, and are well known in the London markets for our sort of capital returns to shareholders.
Excellent. And can you give us a quick download on the financial performance of the company recently?
Sure. Look, we released our H1 results in September this year. The revenue we generated was $103 million, $49 million of EBITDA off the back of that, and free cash flow of 30%. And it's that free cash flow number that's important to our shareholders, because we use that to calculate our dividends. And we have a policy of paying dividends of 30 to 50% of free cash flow. We've actually paid outside of that range in the last few rounds. So we had about 70% of free cash flow being repaid to dividends right now, in dividends to shareholders right now.
Oh, excellent.
Yeah.
And is it fair to say the flagship project is the Kounrad copper mine in Kazakhstan? Can you tell us a little bit more about that, what that looks like?
Yeah, sure. Look, it's an unusual project in that it is leaching old Soviet-era dumps and extracting copper from those. What I mean by that, this is waste material that was placed on surface in a period from about 1938 to 1996. This was material that couldn't be processed economically through traditional processing means. The advent of SXEW in the sort of 70s and 60s and 70s allowed us to apply that technology, that is solvent extraction and electrowinning. It's kind of like that science experiment you did at school where you plate copper onto an anode. And the key thing that makes it unique is that we don't have to mine the material. It's already on surface. It's 650 million tons of material on surface, and we don't have to crush it and rehandle it in any way, which traditional heap leach projects need to do. What that means is it makes it super profitable because there's no mining, no crushing, so the costs are really low. So as a pure copper producer, we're in the first decile on the cash cost curve for copper producers, which is very unusual. Most other projects at that range of the cost curve have byproduct credits that bring the costs down to that sort of level.
So when we think about, say, an operation like this one versus, say, a traditional underground mining operation, how much of a disparity is there in terms of the costs? I mean, it must save you huge amounts of money.
Well, certainly if you compare the two assets we've got, and both of them are regarded as, highly profitable, low-cost operations. Kounrad has an EBITDA margin of around 72%. And Sasa, which is a traditional underground mine, that's at 37% at the last count, right? And that's, kind of related to commodity prices as well. But, on average, as I said, 47% EBITDA margin on the business allows us to be through the cycle profitable. So Kounrad does underpin that because it is, super low cost and, as I said, kind of unique. The other thing is, the operating jurisdiction there is kind of a low-cost jurisdiction. So we have very low-cost electrical power. That's one of the big inputs. So we only pay around 6 cents a kilowatt hour for our energy in Kazakhstan. And we've also put a solar project in place that I think costs us around 1 cent a kilowatt hour. So, getting a good sort of credit on that as well. So, as far as that's concerned, I think, the Kounrad asset certainly underpins a lot of the profit generated by Central Asia Metals. In terms of revenue, it's about half-half between the two assets.
Great. And when we're talking about tailings, obviously this is stuff that's been previously historically mined. That mine was going for a long time, so there's a lot of it. But do you have any idea of how much there is? I mean, what you're looking at from a life of mine perspective there?
So, as I said, this is waste material that was placed on surface. We have very good records from when this was placed on surface, plus we've done our own work on it, and there's 650 million tons of material on surface. We're slowly working our way through leaching that material, doing one block at a time. And we're probably around just over halfway through leaching that material. The life of the asset will probably extend beyond 2034, but our license expires at the end of 2034. So what we'll probably do is apply for an extension to that license, albeit production levels will be a lot lower than what they are now, just because of the way what we call the leach curve operates, which is a curve. What that means is you get more copper out in the early portion of the life of that cell versus the later portion. So the bulk of the recovery, as we call it, comes out early rather than later. And what we try and do is balance the recoveries to get a consistent feed into the plant. As the asset matures and towards the end of its life, most of those leach curves will be on the mature end of those leach curves, so the recoveries will hence be slightly lower. So, you know, that's kind of how it works. Yeah. But in terms of comparing that to a traditional mine, as I said, you know, tailings reprocessing and waste reprocessing are, in theory, a little cheaper because the hard work of getting it out of the ground is being done. In our case, because, as I said earlier, we don't rehandle it, it's a lot cheaper than it would be, but a lot of other tailings reprocessing and waste reprocessing facilities actually do have to pick the stuff up, crush it, and, you know, retreat it again. So their costs would naturally be a little higher than ours, and we just have a very unique situation from that.
Understood. And talking about the wider demand for copper and other materials for further electrification, do you think that the tailings projects like this have a big role to play, because there's a lot of historic and valuable material lying around from mining projects?
Yeah, I think you've hit on it. One of the key points there is that there's a lot of this material sitting on surface, and we're lucky enough to secure this asset with, as I said, 650 million tons of material on surface. The tailings projects that exist are, again, you know, processing through similar amounts of material around there, but their recoveries are going to be a little bit lower. But I do think it's going to become a key component of, you know, meeting this copper demand that we all forecasting, and a key component of the supply. But I think it'll always be outweighed by traditional mining. You think the grades in tailings and in waste are a lot lower. That is, the content of the copper and whatever metals you're actually trying to extract from these things is lower than it would have been in the primary ore. So that primary ore is going to always be the first target people are going to go for. The other point I'd make is that there are technologies being developed to process these tailings as well, and process primary ore as well, through heap leach methods. And if any of those really works well, that's going to be a bit of a game changer. And there are a few of our colleagues out in the mining industry testing these things at the moment on their own projects. And we have tested a couple of these technologies. Doesn't seem to be amenable to the ore that we have at Kounrad, but we'll keep looking. And if technologies like that do develop, and I'm sure they will, it'll mean that component of tailings and waste treatment is going to just increase in relation to the primary ore that's being mined.
No, I certainly see the attraction there. Can you give us a bit more background as well on your other project in Macedonia?
Sure. So Sasa we bought in 2017, and what attracted us to that was a real sort of steady state, consistent production of lead and zinc coming out of that mine. Plus, also, as I said earlier, it's highly profitable as well in its own right. The mine itself is much more traditional, right? So it's an underground mine. We drill and blast, and we collect the ore into trucks and truck it up to the surface. And we also hoist using a cage currently. That'll be replaced in future by larger trucks. So we're trying to make the mine more efficient all the time. Once it's on surface, it's just pure industry standard processing technology, what we call froth flotation. So we grind the material down to a very fine powder form that liberates the metals from it. We then use a bunch of chemicals in a big sort of floating, an array of vats to extract the material from that, which is then sent to a smelter and converted into metal. So tried and tested. As I said, the mine had been operating for a long time before we bought it. We've invested a lot of money in that mine over the last 3-4 years to extend the longevity of it. We've now got a mine life out to 2039, which is 5 years longer than it was when we bought it. And I believe that we will continue to extend that life of mine with additional exploration drilling, applying new technologies and more efficiencies to that ore body as well. So it's another neat little asset. As I said earlier, it produces around $100 million of revenue every year. And of that, the cash flow conversion is quite high as well, allowing us to sustain that dividend payment that we make.
And obviously, you've got these 2 projects at the moment, but you're thinking ahead to other projects too. Can you tell us a little bit about what you're doing there?
Well, we have an active business development program. It's headed up by our CFO, Louise Rathel. We, this year so far, have looked at about 24 assets. All of these are in the base metals, so copper, lead, zinc, primarily, which are the metals that we operate in. We understand those well. We understand how to mine and extract those things. We understand the geology. So trying to stick to our knitting a little bit there. Unfortunately, two main things happen with these sort of M&A activities. Either you uncover a fatal flaw in your due diligence, something you can't live with technically, or you can't live with from a management perspective, politically, whatever. There's all sorts of elements that go into the analysis we do. We'll keep banging the drum. We're just got to keep looking at these things. But we do also have two other elements that we've added to the business over the last 12 months. One is an investment into a company called Aberdeen Minerals, private UK company, which is exploring for copper and nickel up in Scotland. So we have an option to put in around £5 million into that business. And that is kind of earlier stage. They're drilling for copper and nickel mineralization at depth. Early drill results look encouraging. We're waiting for the actual assays to come back from that. But over the next 2 years, we hopeful that that'll return some success. And the other part is earlier stage still exploration in Kazakhstan. We've got a great team of geologists out there who are generating targets for us, doing basic field work with a view to start drilling those targets probably in 2026. So those are the sort of three limbs to our M&A, or our sort of growth strategy at the moment. Is M&A, the Aberdeen Minerals is kind of an advanced exploration project, and then earlier stage exploration with a company called CAML X that we established in Kazakhstan to do that.
All right, so all the exploration activity focused at the moment on Kazakhstan.
Well, we've got a lot of on-mine exploration in Macedonia with around the Sasa mine as well. So we're constantly looking at more ore within our ore body and also extensions to that ore body as well. So, this a lot of it sort of revolves around how successful we are in testing our geological hypotheses, and we've got drills turning at Sasa right now to try and look at these things, and we'll be updating the market with any sort of successes there as and when they occur. Fingers crossed we'll get some good results.
You've talked a lot. I mean, you're obviously very conscious about costs and ensuring that dividend. Can you tell us a little bit about the way you've been using solar power to keep costs down as well? Because I thought that was quite interesting.
Yeah, so look, that's one of our cost-saving initiatives, and it also drives our kind of greenhouse gas emission sort of target that we set ourselves as well. So, as I said earlier, power costs in Kazakhstan are pretty low, but we had a look at the landscape there. It's all coal-fired. There's a big initiative underway in the country to replace that with renewables, which we support completely. But what that's going to mean is, power prices are possibly going to go up. So to mitigate that, we put our own little power plant in place. It's 4.77 megawatt power plant. And currently that is probably shaving around, I think it's about 16% off of our power costs. So we think that thing will pay for itself well within the life of the project. And if power costs continue to go up, that payback period just comes in even earlier. It also reduces our greenhouse gas emissions on site by around 10%. So that's a sort of added benefit of putting that facility in place as well. It produces around 16 to 18% of our power demand at the asset.
And one of the themes here at Resourcing Tomorrow has been about the sustainability of the mining industry and the mining industry's image within a wider, environmentally more conscious investing public. Can you give us some idea of what you guys are doing in that area, and also your own thoughts generally about what the industry could be doing?
Yeah, so look, I'll start with industry and then get into specifics. So I think the industry's made great strides over the last 20, 25 years, just in terms of recognizing its place in society, taking a much more formal approach to the whole ESG and sustainability activities that we undertake as an industry, and also strengthening our governance around, everything from, local stakeholders all the way through to, putting modern slavery, anti-bribery, all those sort of good things as well. What we've done specifically at CAML is we've set ourselves some very, I think, quite stringent targets, but I'm confident we're going to meet them. One is a reduction in our greenhouse gas emissions. So we're targeting a 50% reduction in greenhouse gas emissions by 2030. That's off a 2020 base, and we're about 40% of the, we've achieved about 40% of that already, partly through purchasing of renewable energy in North Macedonia and also implementing this little power plant in Kazakhstan. The other thing we're trying to do is reduce our water consumption. So we have a target for ourselves to reduce our surface abstraction of water. That's taking water out of surface facilities or naturally occurring surface water by 75% by the end of 2026. And we're again well on track to doing that. What that means is recycling a lot of the water we're using in our processing facilities, looking at initiatives to reduce consumption from all of these, from rivers, lakes, those sorts of things. We're not actually taking them out of a lake, but we do take some water out of a local stream. And then, making sure whatever goes back into that stream is potable as well, and it is, well within our sort of standards. And then we've got the local communities we look after as well. So, and again, I think the industry as a whole has done a fantastic job doing this. And what we're doing specifically is we have set up 2 foundations, one in Kazakhstan, one in North Macedonia. And we deploy 0.5% of our revenue into those foundations. Doesn't sound like a lot, but it's about $1 million a year that we're investing in communities that literally had, in one case, had not very much. In another case, were slightly better off because the mine was there already anyway. The big challenge there is the balance between the sort of short-term requirements of the community and the longer-term sustainable projects that'll be there, that'll outlast the operations that we have. So we've done a lot of work around needs assessment and working together with local authorities to finance projects that'll be much more kind of valuable to the community once the mines have gone. For example, we have crisis centers for women that have suffered domestic abuse. We've got centers for disabled children. We've got kindergartens that we support, local education initiatives focusing around STEAM and those sorts of things that'll hopefully, as I said, leave a lasting legacy of the 2 operations that we do have.
Brilliant. Well, thank you very much indeed for joining us today and giving us an update on the company. That's been excellent.
Well, thanks very much for having me along, Stuart. Much appreciated.